Welcome to this edition of Tiger Trade Weekly for Thursday the 7th of March. My name is Greg Boland, and each week we will review what has happened in the US share market over the previous week and what to expect in the week ahead. US equity market continued its prolonged rally that started in late October last year. The S&P hit a new intraday high just below 5150 on Monday before pulling back on Tuesday on news Apple iPhone sales in China have been down 24%. Apple gapped lower to close down 2.8% on Tuesday and also fell again today to be just under $170 a share. On reports that they had hit with a nearly $2 billion European Commission antitrust fine relating to music streaming in a case brought by Spotify in 2019. Secondly, iPhone sales in China, as I said, were down 24%. Stiffer competition from rivals Huawei, Oppo, Vivo and Xiaomi has been cited, but it may also relate to the fact that in September 2023, China banned government officials and employees at state-owned enterprises from owning iPhones. AI stocks have continued their massive run higher, with Nvidia closing just under $900 this morning and is now up 80% year to date, while Supermicro is up 296% year to date and ARM Holdings is up 82% year to date. One measure of this AI activity is the SOX Philadelphia Semiconductor Index, which is up around 20% year to date. You can trade this index via the SOXX and SOXL ETF. The latter one, SOXL, is actually a leveraged 3 times ETF, and given the rally, this is up 60% year to date. Speaking of ETFs, Bitcoin ETFs have become all the rage this year after the SEC allowed these ETFs to be listed from early January. There's been massive inflows into the ETFs. For example, the most prevalent one, IBIT, by the issuer BlackRock, which issues the biggest ETFs in the world and has the most funds under management in ETFs, listed their iShares Bitcoin Trust. Funds under management currently lies at just over $10 billion and daily volume is around $1.7 billion a day, which is huge volume compared to many of the 6,000 ETFs listed in the US. The second most prevalent, Fidelity's Wise Origin Bitcoin, for example, also has large volume with $6.5 billion of funds under management and flows of about $1.1 billion a day. Grayscale, ARK and Bitwise make up the next 3, and the volumes are there on the chart for you to see as funds under management and also their 24-hour volume. So what are the benefits of investing in these Bitcoin ETFs? Well, for investors, a Bitcoin ETF provides a very simple, easy way to invest in Bitcoin. When you actually buy the actual Bitcoin yourself, it requires a lot of research and technical knowledge and signing up to an exchange account, maintaining a self-custody wallet, and learning how to manage your portfolio. These are responsibilities that many don't know how to do and how to take on. I, for one, have never done that. And the ETF, to me, makes a lot of sense. A Bitcoin ETF is also an easy way, as these are issued, and security of one's actual individual coins becomes irrelevant because the ETF manager takes on this responsibility for you. You can simply buy and hold the shares just like normal shares in your normal Tiger Brokers account. Regulatory concerns also vanish as the products are listed on an exchange such as the New York Stock Exchange or NASDAQ, and the product must be approved by the SEC. So trading of such a security can be done as easily as buying an Apple share or an Amazon share. However, there are risks in any market, and there are also risks in ETFs. And the ETF is based on a spot product. The spot product in this case is not gold or silver, it is Bitcoin. And Bitcoin is a very, very volatile market. And that volatility remains the biggest single risk for an investor in these products. Also, there is, with an ETF, the same as a gold ETF or any other ETF, there's always a tracking error in that the fund manager, in this case, say BlackRock, is trying to mirror what is happening in the underlying market. But sometimes because flows of funds coming in or out, and also management fees and expenses, then there is always a tracking error whereby the Bitcoin price and the ETF price may not match in terms of their price change. This discrepancy can affect your investment performance relative to holding the Bitcoin directly, but I would suggest that this is maybe a little bit superfluous. With all these types of markets, particularly new products, Bitcoin and regulatory uncertainty is another significant consideration. The market is still evolving, and changes in regulation can impact the legality, trading and valuation of these Bitcoin ETFs. And for instance, future regulatory developments could influence the operations of these ETFs, and custody and compliance requirements may affect the performance and accessibility to these ETF products. Furthermore, you should be aware of the custodial risks associated with Bitcoin. So you're relying on a particular fund manager to hold the Bitcoins for you. In all markets, in any product, there's always cybersecurity risks, and this doesn't go away just because you've got an ETF with a particular fund manager. Obviously, that fund manager is trying to eliminate that by having, very good IT security, but it still exists, and you should be aware of that. Therefore, understanding all these risks and how they align with your actual risk tolerance and investment objectives is essential if you are looking to invest in these Bitcoin ETFs. So thanks for joining us, and we look forward to seeing you again next week. We should be aware that next Friday is called Triple Witching Hour, and it occurs on the third Thursday of the last month of each quarter, in this case March. So March, next Friday, becomes a Triple Witching Hour, in which the futures, the options on futures and the options on shares, so triple, all expire at the same time next Friday after the market close. There will be a lot of volatility in stocks as individual options and futures holders buy and sell to hedge positions, close positions and re-establish positions in these markets, and this will affect the volatility of the market over the next week. Thanks for joining me. Look forward to seeing you again next week.